Welcome back, everyone, to a brand new episode of the Crypto and Muay Thai podcast. I'm fortunate today to have a really special guest, Mike Finch. Mike is one of, a guy that has been in this space for a very long time, relatively speaking, in terms of a variety of different aspects within digital assets, but also blockchain as well. He's also a great stand-up guy based here in Pittsburgh. So I'm really excited for this conversation. Mike, pleasure to have you. How you doing today?
I'm doing good, man. I'm doing good. I appreciate you having me. Gotta throw in the Pittsburgh part there. Hopefully that helps me be a better stand-up guy in some way. But yeah, it's nice to have another fellow crypto person here in Pittsburgh. So like I said, happy to do this. Happy to be here.
Absolutely. I mean, it just is what it's in my DNA. I have to rep Pittsburgh whenever I get an opportunity. So it helps us here and helps me, especially talking to other smart people as well. So I figured let's just jump right into it. You've got a super interesting background throughout the space, but before that, just tell us a little bit about yourself and also what finally how did crypto and blockchain get their hooks into you?
Yeah, sure. So I kind of grew up a jock and athlete. Never was really a huge fan of school or anything. Played football pretty much all my life, and went to a little school just south of Pittsburgh up here called Washington and Jefferson, and played football there for a few years. Moved on from that after about 2 years, as it was certainly less fun and kind of more of a job at that level. And kind of went through this period of figuring out, what I wanted to do. I was studying psychology at the time, and my older brother, luckily for me, as a junior in college, started a small craft brewery. So I jumped on that in an effort to get as much free beer as I could at college. And as I graduated, that kind of morphed into more of a full-time job, which had me traveling eventually all over the country. So right out of college, I was kind of, I knew I wanted to do something around business and sales. The opportunity to work for, family business that my brother and my dad had started was awesome, especially being in beer. So I was really thrown into kind of the deep end, if you will, when it comes to just learning how to sell things, learning about business, learning about relationship management, and all the various things that come as not just a salesperson, but also somebody who was managing distribution of many different beer types across, at the height, I think it was about 25 states. So, as that was going on, my younger brother, who was not involved in the brewery, Rob, who's in crypto still as well, had been telling me, he'd previously told me about Bitcoin. It's kind of your classic story, right? Somebody tells you about Bitcoin and you kind of blow it off. But he started hearing about it in 2011 because he was playing, computer games and whatnot, where I think Bitcoin was involved as a way to transfer items or something like this. And I didn't think there was anything to it. It came back around as the price jumped to $1,300, and for whatever reason, I've always kind of had an interest in finance and trading, and the concept of markets. Wasn't my background. My background's in psychology and business and sales, but for whatever reason, I've had an interest there. So when that happened, it started to spur my interest a bit, and about 2014, 2015. At this time, I was working for the brewery and graduated. I jumped in a little bit and thought I knew what I was doing, kind of trading some Bitcoin back and forth with some savings I had. And I think at the end of the day, I lost most of that money before finally digging deeper and doing some research and learning about Ethereum, which was kind of the first thing that helped me understand that perhaps there was going to be a much larger asset class that was involved with this new crypto stuff versus just Bitcoin being the only single asset. So any of the remaining Bitcoin I had left dumped into Ethereum in about 2015 or so, 2016-ish. And then, we kind of went through this massive pump in the spring of 2016, at which point it started to become more real, right? Because, I had a few $1,000 or whatever in Ethereum, and it went from $5 or $10 up to, much higher, $50 or so that spring, and kind of doubled down on the research, trying to understand what's going on here, right? Where is it traded? And quickly discovered that alongside Ethereum, there was this this kind of burgeoning concept of an ICO. And my brother at the time, Rob, was looking into ICOs as well. And as more and more started to pop up, we noticed like late 2016, early 2017 timeframe, they were selling out pretty quickly. There weren't a ton of returns that you could kind of show yet for ICOs, but just the sheer amount of money they were raising, which at the time was only $5-10 million bucks, it seemed like a lot back then. Kind of collated with the speed at which they were selling out, minutes, hours. We said, okay, there might be something here. So we put together a basically like a spreadsheet of sorts where we could track, which ICOs were currently live, which ones were up and coming. There was maybe 15 or 20 ICOs there. And, that eventually bloomed into something much bigger as he developed a website called ICOAlert for it. So, from start to this point, it was kind of a curiosity that worked out into quite a bit of luck in getting into Ethereum at the right time, to discovering ICOs and some other new assets that were coming out. EOS was a big one that we were interested in for a long time. And eventually, in spring 2017, he started this ICOAlert website, which was a way for folks to track various ICOs that were live, they were upcoming, as well as those that had finished and raised money already. And at this point, the market was really heating up. The excitement around crypto was peaking in a lot of ways, and ICO, there were new ICOs launching every week. So at this time, I had left the family brewery and was, I think, working for another brewery, and decided to leave and to move on and help him start this company, which we did. And as we saw for the rest of 2017 and into 2018, the ICO market just completely boomed. So basically what we did at ICOAlert was collect all of the data on all of the, outstanding current and former ICOs and try to present that in a really simple way for people. So the business revolved around collecting data, going through a lot of the kind of internal responsibility that we thought we had in ensuring that we were only showing ICOs that, weren't kind of outright scams, right? Which was pretty pretty beneficial at the time. There were quite a few of those, and that was a large part as to why that boom ended up being a bust. But took some big bets on data, did really well, ended up turning it into a multi-million-dollar business. And as 2018 kind of continued with a slow bleed of sorts, that business phased out, and we ended up shutting it down. And kind of had some time to reflect, and decided that really, if I could focus all of my time on the investment and the trading side, that's really where I would excel. I was comfortable with the risk that crypto had presented in the past, and thought that as it continued to grow, hopefully, that risk would ultimately continue to decline as time went on. So, instead of kind of going out and raising a bunch of money from, venture capital firms, and to start a new business, or from LPs to raise under a fund, decided to just self-fund a couple different opportunities. One of which is Pirata Capital, which is what I'm working on now, which is a super small self-funded hedge fund that myself and a friend and business partner of mine work on, where essentially we can kind of do what we want with very little oversight, and test a variety of different strategies that we think could be beneficial to us or to other people by productizing those strategies at some point in the future. So, it's been really about 5 years, maybe a little bit longer, since I jumped in crypto. Formally about 3 years, professionally, but it certainly feels like 30. So, that's kind of the starting story, I guess, of how I got there.
Yeah, I mean, that's crypto in and of itself. It just moves so fast, and 1 month can feel like 6 months. So I can, I mean, that's why whenever I start, it's like this guy is a veteran, and it's like if you look at the tail of the tape, it's like okay, well, 3 years, 4 years, like 5 years. That's not that much. It's like, but in crypto and in blockchain, that is an old dog. So like like right in the middle. So I totally get that. I had no idea that you were, played football at W&J and decided you didn't like it. I had not a similar path, but I did something similar. So I needed to play college football as well at Robert Morris, and quit again after approximately 2 years, realizing that playing football in college is not nearly as fun as it was in high school. It's very much a job as well. so
Yep.
so that
Yeah, for sure. It was, W&J is interesting because they have a period of time in between the first and second semester, the fall and spring semester, called intersession, which is basically just a month where you take something like 30 to 40% of the classes you would normally take in a week. So you might have class on Tuesday and Thursday for 2 or 3 hours, and that was it. And, the other 5 days out of the week, you were free to do whatever you wanted. And the first 2 years I was at W&J playing football, almost every morning we had to get up at 5:30 or 6 in the morning and work out. So we were trudging through the snow and in the freezing cold, going to work out and then going to class and having to go watch tape and then, do some sort of other workout or go to practice. Well, all of my friends were able to kind of party or sleep or watch movies or do whatever they wanted. So, after a while it was, I wanted to have fun, I wanted to do the college thing.
For sure. I fell into the exact same thing where you sort of, everyone tells you about college is supposed to be some of the best years of your lives. And it's like, I'm not having that much fun playing football. Football was a great experience for me during high school, but I'm not necessarily getting that same exact feeling here in college.
Right.
So yeah, it was pretty much a very similar sort of outcome from that particular perspective. And then like psychology, I presumably psychology has helped you in trading these particular markets, because at the end of the day, I mean, there's a lot of bots involved, but it's an auction. It's not a scientific calculation. It's an auction between two individuals or a machine, but has logic from an individual behind it, telling it, giving it rules and telling it to do this, that, and the other, buy and sell at this particular time based upon human logic giving it rules. So have you been leveraging that particular background in psychology as you've made this transition from ICO Alert over to Pirata?
Kind of. I think I was fortunate to major in something like psychology, where doing just undergrad for psychology is very broad. If you want to do something more specific, like for a period of time, I wanted to be a counselor of some kind, which would basically require you to then go on and like many other majors, focus super specifically on counseling in your master's degree, and then if you went and got a PhD, that would come with other kind of benefits as well. So there certainly wasn't anything specific, any sort of framework or structure thought process that I can kind of point to that would help me in one way or another. I was always interested in psychology because I was interested in the way that people make decisions and um, a lot of kind of the even the more sociological impacts that those decisions have. So studied a lot of just kind of human behavior and uh, a lot of the classic, psychology research studies that are associated with that. So it's hard to point to one thing, but I think I've always kind of been somebody who can put themselves in other people's shoes, which when it comes to trading or when it comes to managing a business, managing people, managing relationships, even back to selling beer, right? If you walk into a beer store, and at the time I was selling craft beer when craft beer was relatively new. So you walk into a beer store and there's no craft beer there. You can kind of come to conclusions even just based on that single observation as to how you should sell that person, right? Versus walking into a store where there's a ton of craft beer. So broadly, I think some of the ways to just kind of observe and and infer things has helped.
Gotcha. That makes sense. So you mentioned that with Pirata, you're doing a lot of different experimentations, given you guys are proprietary in and of itself. So where are you guys, or what frame of school are you guys pulling from as you go about and iterate on some of these different strategies?
Yeah, so maybe just to back up a bit and give some more context, right? Like there's been an explosion of crypto funds, as crypto has become more of a larger asset class, or at least a broader marketplace, versus just Bitcoin being traded. So we've kind of had this explosion of crypto funds, and really when you look at running a fund or managing money, there's kind of this economies of scale that has to happen for it to be worthwhile past a certain point, right? And what I'm really getting at there is raising capital. So traditionally, a hedge fund would be born out of someone who has worked under a large firm or a bank, has existed on some sort of trading desk and done very well for 10, 15, 20 years before they go out and attempt to raise some meaningful amount of capital, generally, at least 25 million. But really at that point, you're only kind of covering costs, if that. You really need to raise probably 50 to 100 to get any sort of benefit in the fees that are associated with managing money. So, maybe you start there, you try to certainly show good returns for 3 to 7 years so that you can go out and do a much larger raise, become a larger kind of almost family office size investment fund. And now you're at a point where you're able to take your management fee and your performance fee off of the money that you manage, which allows you to lease an office space and run a team, and kind of build out your frameworks and your processes in managing that money. But with crypto, it's a lot different, right? Because the everyone knows it's high risk, and at the same time, no one really understands what those risks are. So to go out and raise that amount of money, it's very difficult. There's really only about probably 5 or 6 crypto hedge funds that manage, a 9-figure amount that is sizable, that kind of allows them to work with that traditional model. So from the start in launching Pirata, I knew that I did not want to kind of move from ICO Alert, the small business, that it was, directly into that high pressure hustle small business environment. I wanted to do something more on my own, where I could, I didn't need the office, and thus made the decision to go and just self fund the hedge fund. So, was fortunate to have made money in crypto before, was able to do that, and from the jump, kind of looked at it in 3 ways, or three phases, I guess. The first phase being kind of the startup, right? Getting used to actively trading in the market, understanding the context of the market at any specific time, and kind of understanding what the best framework was to run various strategies through. So we've been doing that for a little over a year now, and have started to transition to kind of version 2 or phase 2 of the fund, which we always imagined, myself and my partner Zach Lee, to be something that was a bit more market neutral, something that allowed us to exist in the market and kind of get in and get out with returns. We don't like to hold assets for a long term generally, especially not in kind of a fully exposed way, right? So we're not somebody who holds a handful of Bitcoin in cold storage or in custody somewhere, hoping that over 5 or 10 years the price will go up, right? We want to show returns generally, over time, while reducing the inherent risk and volatility that comes with crypto. So we're kind of in that phase 2 right now, where our focus has been working on a variety of these more market neutral, or I guess just kind of risk adjusted strategies, as crypto has matured from a financial infrastructure standpoint, and that's really where we sit today, with the fund open about 13 months now.
Got you. Yeah, I mean, market neutral strategies seem to be there's these certain like hot topics that everyone just kind of latches onto within this space. And I think that's one of the great things, but also at least one of the more interesting things about this particular space, where topics just track ton of attention, ton of capital just flow after them. And the two for me that come to my mind is obviously DeFi, decentralized finance, for those who don't know, but then also market neutral quantitative strategies. So those two things, at least in this year, have really been blowing up. I mean, DeFi even goes back into 2019, and market neutral strategies as well. So, I mean, it seems like you guys are well positioned, where a lot of the attention and a lot of the money seems to be flowing more and more within the space.
Yeah, I think crypto works a lot like that, right? There's kind of this larger herd of sorts that moves back and forth to new opportunities, very much in a venture style way. Most of the money that's flowing into crypto is via venture firms. So you kind of have this natural, longer term buy and hold mentality for most folks, especially those who are kind of in crypto part time versus you're more full time. That's how I started, right? As I was working for the brewery, it was something that I held, and hoped basically over time it would go up as it was a new technology and continue to kind of gain this mass attention from other folks like myself, right? Somebody who's between 20 and 30 years old at the time, and is trying to kind of find some diversified way to make money past just putting it into an IRA or buying Apple stock or something like that. So I think you kind of have this general herd of sorts that moves back and forth from different opportunities, right? We saw that with ICOs. Everybody moved into ICOs, and as Bitcoin reached its all-time high and got crushed, it kind of wiped out the rest of the market, and certainly decimated the ICO market. And you're right. I mean, I think DeFi is definitely kind of on more of that herd mentality aspect. The popular person at school, if you will, at this point, right? I think whatever trend exists with crypto, I think it has to be, number one, something that's supported by that venture money that's flowing in, just so that your talented entrepreneurs and developers can, continue to run with those ideas that they have, and eventually build out a product where that product is essentially serving the various crypto folks in the space, whether they're traders or holders or technologists, developer types, or maybe they're just enthusiasts who don't really necessarily fit one of those molds. So DeFi does a good job of that, right? They have had the initial support of a lot of the venture money flowing in. They have the token model, which everybody loves, and the utility of being able to earn various yield on top of your tokens via staking or some sort of automated market making is, I think, attractive, but also new enough for folks in crypto that it could potentially be something that we continue to see excel and throughout this year and into 2021.
I mean, I've been incredibly bullish and optimistic on, the premise, the theory of DeFi, but you've seen very few actually kind of really nail a solid use case. You're seeing a little bit more, and right now, again, the flavor of the day seems to be lending in different frames and fashion, but primarily like collateralized lending. So, for those who don't know, if I've got, $10,000 in Bitcoin, I can use that as collateral to take out a loan for whatever it may be. And that seems to be one of the initial big use cases that has really started to take a lot of focus. And recently, what you're seeing with a lot of DeFi tokens in relation to decentralized exchanges, DEXs, protocols to service that in a variety of different ways, it's really been taken off this year, especially in terms of price. I mean, Compound, is flying up. 0x is another one. There's tons. You can literally just, go to Masari and scroll down the list of DeFi tokens, and you'll probably see 10 to maybe 15 different tokens that are up well over 100% year to date. So it, like you said, it ticks all those boxes of capital flowing to it behind it, but also there needs to be a narrative. Like from my particular perspective, this market is so addicted to narratives, and it's almost like a fake it till you make it, where it's like Bitcoin was always touted as this new alternative currency, medium exchange, and then it sort of morphed into the store of value. And I mean, it was a new technology 5 years ago. It's still a new technology now, and it's this narrative that has really continued to just drive. And now we're getting to the point where you've got legitimate people like Paul Tudor Jones, as an example, where they're saying, "Yeah, I think this actually might have the ability to be a reliable store of value, in the future." So I think narratives are incredibly crucial, and DeFi hits on that a lot, which I think market neutral strategies do as well. But obviously, it's not nearly as viral, in my particular opinion.
Yeah, for sure. Then narratives is a great point. It's one that I think will continue to move, or maybe not even move, but just continue to hold people kind of in the place that they sit now, right? So if they're Bitcoin only, if they're huge crypto enthusiasts, if they're ETH only, right? Kind of this maximalism. The various narratives that come and go are funny to see over time, because those who are so kind of tied to one narrative and maybe even anti, another narrative, right? Like we saw with the uh, the block size debate back in 2017, and a lot of the chaos that happened there, which eventually birthed Bitcoin Cash. Some of the same people I imagine that were arguing against that now are okay with Bitcoin acting really as kind of this form of payment, right? At least between say people across borders, where they don't want to use like a Western Union or something like this. So yeah, narratives are tricky. I think broadly over time, they're good to follow and good to watch. I think they're incredibly hard to predict. DeFi in particular is kind of like a sub narrative for me to ETH and why ETH will do well. I think the thought around ETH is that it kind of started as this the new internet, right? Kind of the world's supercomputer with all these smart contracts, and it's going to accrue all this value on chain, and from there you had ICOs and all these new tokens coming out, and dApps were going to be the next thing, and there was going to be all this growth, and out of nowhere came DeFi, right? In this smart contract concept where you could use some of the simpler financial products, but in a decentralized way, or quote unquote decentralized way, without having to interact with a counterparty, which as crypto is kind of plagued with bad counterparties in the space over its history. So I'm kind of with you, right? Like I see DeFi continuing into the future. I think they've got a lot of problems to solve. I think there's a lot of hurdles for DeFi still. There's a lot of similarities to ICOs that I see for DeFi currently. Kind of the regulatory hurdle for DeFi is going to be a big one, but from a narrative standpoint, it's definitely an interesting one to watch.
Yeah, I think regulatory and also technological are two of the big hurdles that I see for that particular space. So I think I mentioned it last time on the last podcast, but one of the perks, again, repping Pittsburgh, being here is we've got this amazing technology school in Carnegie Mellon, and we can just go over there and sort of talk to some of these cutting edge researchers who are actually working on a lot of these problems in cybersecurity, blockchain, everything, essentially all the intersection where all this comes into place. And a lot of times whenever you speak to them, it's like, this isn't ready. This isn't remotely ready to store a considerable amount or a significant amount of real world value on it. We could easily break this. Obviously, they're researchers and they're not nefarious actors, so they won't do it. But they say, they'll say, like, we could easily break this with this, this, and this. And then you see that happen in the real world where, there's a lot of these hacks that happen, and just like they said it would. So I think there's a technological hurdle, but there's also a regulatory hurdle as well that you're sort of talking about. I think long term, I'm bullish on what it could potentially represent. I just want to see it actually deliver on some of the issues that are kind of currently outstanding in its current form. And that's only going to happen with sort of creative destruction, where a lot of the hype projects that you're seeing right now eventually are going to fail, go to zero, or substantially do like a rebate and try to untake the tokens. Like I just saw a quick tweet before I jumped on saying that Algo is taking back, like redeeming all the coins that they had issued a year ago to all holders. I didn't really dig into it, but it's like you think about, what are those potential implications, and you totally can see how that can happen to a lot of these utility tokens for a lot of these DeFi protocols.
Yeah, for sure. I think the more time I spend in crypto, the more aware I become of a lot of the inherent risks that exist with it. Crypto is a unique technology in that pretty much from birth, it is in most cases fully open source, and also generally from birth, attaches some ability to create like a free market that can be traded, right? And you don't see that with other technologies. You don't see that with the VR AR space. You don't see that with IoT. You don't see that with other kind of new products of sorts, whether they be technological or not, right? They kind of have to grow to a certain point before they're freely traded. Certainly money flows into them in a venture style way, but in order to kind of make it to the big time and to be traded publicly, or even privately, you have to check a certain number of boxes to get there. And with crypto, that's not the case. So as these groups of traders and holders and speculators really across the board have continued to grow year after year, the power that they hold in making or breaking a project from a financial standpoint has continued to increase as well. So I currently don't use DeFi in any way for kind of the hacking and the exploit reason. I don't think that they're kind of the risk reward is there either. You can get pretty attractive rates using CeFi, using your centralized finance. Your BlackFi and Celsius are giving 8+% on stable coins. And while you might be able to get a larger rate on ETH, or you might be able to go through some sort of kind of collateral auction and make money on that over time, a lot of that has now kind of been algoed out and botted out. So there's not really a ton of opportunity there, unless you have the means on the development front. But for me, DeFi I think is most interesting because really it continues to prove the concept within crypto of crypto being a parallel financial infrastructure or parallel financial market. Bitcoin started as another way to transact value, to send money or to send value to people all over the world with no risk of government intervention or someone seizing your money, and that kind of expanded to, I would say, ETH and the ability to raise money via ICOs, right? That was really the big thing for ICOs. I mean, for some time, our motto was become your own venture capitalist, right? Because you could go out and self-fund all of these new crypto companies. The financing of ideas is an underlying kind of foundation to speculation in a lot of ways, right? That's really kind of the ultimate speculation, is taking something at its infancy and making a bet that in 10 or 15 years it's going to be worth a gajillion dollars. So we're kind of continuing down that rabbit hole, and fortunately it hasn't gotten to a point yet where it's been completely bastardized by third parties in any way. You could argue that exchanges are doing that a little bit with like some of the staking networks or whatnot, but for the most part, we're still kind of slowly taking steps there now, with lending and borrowing being the largest. And I think we'll really start to see the concept of yields and people chasing yields, especially as rates around the world continue to drop. I think that will kind of be the next big step that crypto takes as a way to say, hey, we are not Wall Street, we are not the banking world, but we do have some benefits based on our nascency or based on our technology or whatnot that you can't get by putting your money in a bank, or you can't get by buying stocks. So it's almost, looking back on it, it seems like it should be easy to predict, to say like, okay, well, if we're raising money for projects now, at some point we're going to be borrowing and lending. So
Yeah, I mean, it's always easy to look at things in hindsight and say, of course, well, of course that worked out for sure. I think, I mean, I completely agree with you. Like, I don't use DeFi for a lot of things. I mean, I've played around on it before, essentially from as a way to get exposure to it, to see how it goes through its iterations and actually improves, whether it be user experience, security, offerings, things like that. But yeah, I haven't used it for the fund, Valley and Arrow, and I haven't really moved significant amounts of capital on it personally or professionally as well. So I agree with you in a lot of areas. You mentioned one thing there that I think it's interesting to at least double click into for a brief second, the idea of yields. So the obviously everyone knows the macro environment where we're at right now. We've got this huge headwind in terms of, which is essentially leading its way into deflation. We've got a ton of debt and severely hampered economic activity as a result of COVID, which is pushing rates around the world more and more into the negative sphere. One of the ideas, again, not necessarily DeFi, but rooted out of this new burgeoning narrative space, is the proof of stake protocols versus proof of work, tied to Bitcoin and some of the earlier stage protocols and assets. With that being said, with proof of stake, you put up assets saying like, all right, well, I own, or I have, let's just say 2,000 of Tezos as an example, and I'm going to use that as a node on the system to help run, again, this virtual network that in theory would be offering real world value and utility to whatever end user it may be. And in exchange for doing that, I'm going to receive rewards in the terms or in the form of Tezos tokens in this particular example as a yield to help me out. That yield is tied to the Tezos tokens and not necessarily tied to USD, but it's a narrative that has really gained a lot of traction in the most recent times. So you're talking about yields. I think we'd be remiss to not at least touch into that just a little bit, talking about how that could potentially be the next thing where more and more people, including more sophisticated institutions, want to go in, but also kind of some of the drawbacks, because it's not an apples to apples comparison as you would think about it from like a fixed income perspective.
yeah, for sure, it's a great point. I mean, personally, I think that is where, if we ever do see another large bubble within crypto, I mean, I think to some degree crypto is kind of its own bubble, like you would see with other technologies. But if we ever see one like we saw with ICOs and with Bitcoin back in late 2017, I think it will involve yields. If you kind of play the story out, there's a race for yields upward, right? In the same way that an Amazon kind of races for zero, or a lot of exchanges race for zero fees, right? It's the opposite. If you can provide even 1% to 2% greater yields for your customers, and can do that in a way that allows you to hopefully at minimum keep your lending and borrowing model, or whatever your yield generating model is, up for a certain amount of time, the thought is that you can attract enough customers to your platform, so that you can very quickly create a large yield generating marketplace of sorts, right? So I mean, we just saw this a few weeks ago, right? BlockFi has been offering higher stablecoin rates than Celsius, two of the largest centralized finance players in crypto, at 8.6% versus the 8.1 or 8.2 or 7.9, whatever Celsius offers at the time. And Celsius just upped their rates to 8.69%. There's kind of this game of poker happening already. It's mostly happening within CeFi, but I think it could happen in DeFi as well, where as more and more projects come out and as DeFi continues to bloom, what will happen is more and more big money will, venture money specifically, will throw cash at these projects, and that cash in a lot of ways will be used to subsidize these rates. So You know, I think the first step will be DeFi getting to a point where its rates are significantly better than a CeFi. They haven't really been able to do that consistently yet. But once they do, you know, once they can double CeFi rates, understanding that I think over the next probably 1 to 3 years, those CeFi rates will come down slowly. If CeFi is offering 6%, DeFi can offer 12, you're going to have a rush of both current crypto folks and new crypto folks who are being paid in dollars or in euros or have excess savings and, you know, don't really have any desire to get 0.3% on a Robinhood, but would love to get a 12% on you know, some very usable DeFi product. So as that comes in, I think you could kind of potentially see a you know, see a bubble there. I mean, the staking thing's kind of interesting to me. I think staking has a problem with real yield being, you know, the amount of relative yield you're getting on the tokens that you have versus the amount of inflation that the network is seeing. Now they're kind of, you know, some networks are offsetting this really well by increasing what's called their staking ratio. So if you look at Tezos and Atom, those are two that have done a really good job of manufacturing this in a way. You know, staking ratio is basically the number of tokens that you have that are out liquid on the market relative to the number of tokens that are being staked to the network. So for proof of stake, this is important because it theoretically increases security of the network. But for someone who holds Tezos or holds Atom, this is potentially beneficial because by securing the network, by staking your tokens to the network, you're pulling liquidity out of the open market. And with other unique functions like Tezos' function of requiring self-bonding or self-delegation, where if Coinbase, for example, offers staking, they themselves have to hold and stake a certain amount of Tezos. You can kind of see how this cycle continues upon itself, right? Where tokens get pulled out of the market, they're staked, liquidity dries up, price, you know, jumps up a little bit, which brings in new users who buy more tokens, increases the overall buying pressure. As long as you can maintain that staking ratio, and you know, you build in some nice components like that self-bonding requirement, so that you have not only just new investors coming in, new users coming in buying Tezos, but also the exchanges like a Coinbase who are required to hold some proportion of or some fraction of tokens relative to the amount they have staked under them. You run into this self-fulfilling prophecy of just kind of constant upward momentum for the price, and we really saw Tezos do that last year and into this year a bit. So the staking, you know, it was initially very interesting. You know, we messed around in staking with some lesser known staking projects, but I think they're going to have more of an issue with real yield. You know, I guess you could kind of argue that CeFi or DeFi aren't really offering real yield if they're subsidizing their rates there too. But you know, until someone can really figure out the UX and UI issues of staking for the average for the average user, I think DeFi will kind of you know, lead the race there, if you will.
You said a lot of interesting stuff there. I think the first one that caught my eye is talking about yields from the perspective of stablecoins. So for anyone that might not know, stablecoins are digital assets primarily built on the Ethereum protocol. And it's in theory tied to a specific amount of fiat assets. So 1-to-1, you know, US dollars. And whenever I say in theory, it's because the largest player within this game is a company called Tether, and they've been very ambiguous, less than openly transparent in regards to, you know, essentially collateral, saying, all right, well, we've got a market cap of $5 billion, and I can show audited that we actually have $5 billion US to support that market cap of 1-to-1. Other more open stablecoins and also more regulatory blessed have been able to do this, but they're far smaller. And stablecoins has been another killer asset in 2020 in response to COVID. And I really didn't realize this too much until I started like really talking to people. seeing some research, but also the same exact time, I've been a contributing writer to Brave New Coin, and they're based in New Zealand. They've got people all over the world, and they're talking about, oh, well, given the drop, maybe it'll be a good time for me to use my tether, or maybe I'll just hold on to my tether. And I think as Americans, we forget a lot of times that we have the world's reserve currency. So it's super easy. It's like, well, I've got dollars. If I want to play the market, I just got, I've got dollars. Or if I want to save some money with zero yields of a bank, I've got cash as well. These other people in other parts of the world, especially if you're in a weak fiat regime, just extreme examples, Venezuela, Argentina, and stuff like that, that's incredibly attractive. As long as you've got internet connection and you've got the ability to procure these stable coins, you essentially have store of value within US dollars, which you can then take and see whether or not you think Bitcoin is an even better store of value if you believe in the depreciation of the US dollar with all the money that the Fed is pumping into the system, into the economy, as a way to sort of stave off this economic weakness that we have from COVID. So I think that how that game is going to play out is super interesting, because I don't see, barring some sort of like regulatory hammer coming down, the demand for stable coins really diminishing anytime soon. So if they continue to play this cat and mouse game of increasing yields, there's got to mean that more and more they're going out on a limb in terms of risk. So whether that's counterparty risk, or whether that's in terms of cash flow risk, essentially operating at a loss, there potentially could be some issues that centralized lenders are going to run into, which again, the end retail user or whatnot might potentially run into as well. And then with staking, the real yield of staking, I find that incredibly interesting as well, to like truly think about the positive self-fulfilling prophecies. I mean, whenever you said that, that's crypto in and of itself. Like, the goal is to set up incentive structures so that is a self-fulfilling prophecy. That's in essence what the theory was of the Satoshi white paper. And now that's what everyone was touting in terms of saying, supply issuance is going to be cut. Demand is still growing. So we're going to continue to have this self-fulfilling prophecy of price going up in perpetuity over time. We'll see. Obviously, you and I are in the space, so we believe that particular narrative to some degree, but I don't think nearly as on steroids as the normal people. But one of the things in regards to that, where you're talking about properly set up structures to do that, and you use Tezos and Atom as one example, as we know, like reflexivity, it goes both ways. So it can start working for you, but it can also start working against you. So I'd be curious, like, how do you think, some of those structures that they put in place to help buoy their price might eventually start working against them, especially if you look at the market environment and say, all right, maybe we're due for a little bit of softness, given we've had pretty much a straight run up, a nice linear path up since the March 12th, 13th drop.
Yeah, it's a good question. I think if you look at, specifically staking assets, right? These altcoins of sorts, these, alternatives to Bitcoin, or even at this point, alternatives to ETH, they seem to kind of fall into this pocket of time where I think those altcoins that do very well do so because of timing, because they're able to enact some sort of incentive structure. Maybe it's just as blind as timing the market correctly, and then certainly execute on kind of what their goals are and whatnot. But over time, what we've consistently seen, except with maybe Ethereum, is that people tend to get bored and they tend to move on. When you have an industry like crypto, where technology is advancing so quickly, where kind of new iterations of things, of which pretty much everything is open source, right? Meaning that everyone can go and look at exactly how your technology works. It's very easy to come out with a 2.0 and a 3.0 and a 4.0. So, Ethereum isn't even to their generalized proof of stake model yet, and we already have dozens of different, what I would call hybrid proof of stake models, like we see with Tezos or so many others, delegated proof of stake as another example. So My fear as if I was somebody who was heavily invested in one of those would be that, how long does it take until that herd gets bored and, innately looks for other newer speculative opportunities that have a fresher roadmap and a fresher potential with kind of the newest or the hottest narrative or hottest technology within crypto. So, for the time being, Tezos has done really well. Atom has done really well. There's a handful of other staking protocols that have done really well because everyone is very focused on, hey, if I'm going to hold this, kind of what are you giving me in return, right? What is the yield that I'm going to receive for taking this risk of believing in the project and holding the token and securing the network. So if that if that fades and there's some other opportunity in the market, be it DeFi or something else that comes along and replaces staking, or perhaps there's some new staking model that comes about that makes your traditional proof of stake obsolete, then you can start to see where some of those fractures in that structure would start to exist. I think in a lot of ways, you're always going to have your venture money there to kind of back it up. But what all of these projects are looking for is kind of your retail group of folks, your enthusiasts, right? Those who are kind of part-time crypto, who are fascinated by the technology and want to use it and want to tell their friends about it, right? That's what you want as a new project. You want to be able to show that you have a user base, that your community is growing, that your network is healthy. So if that group of people leave, those incentives start to get stretched thin, and if you come upon a very bad event like we saw in March with the global economy and with crypto, those thin incentive structures will snap, and we saw that with a handful of different things in crypto.
Got you. That makes sense. Talking about potential bad outcomes and just general market structure, sometimes you see just gaps, with March 12th and 13th drop being one of the more pronounced ones. How do you feel about the general market conditions right now? And whenever I say that, for those of you that don't know, Bitcoin's by and large the biggest, the top dog in this particular space. So whenever I say market, I'm 100% referring to Bitcoin, because what Bitcoin does, the overall market is going to do. There's just no way around that right now. So with that, how do you necessarily think that? What's your particular perspective? Throwing back on your fund manager, Trader Cap. What's your perspectives on the market in its current form and state right now?
Yeah, it's a good question. There's a bunch of different ways to answer this. I mean, broadly, I'm very positive on where I think cryptocurrency and crypto as a larger market or larger asset class will continue to go. In the shorter term, I think that we haven't fully seen, a lot of the final ripples of sorts that happened in March. I think both for the global economy and for the crypto economy of sorts. Anytime you have such a giant splash, such a giant rock thrown into the lake like that, things kind of settle down and you assume that everything's okay. But underneath the surface, there could be quite a lot more going on. So that's kind of the general fear that I have. I think the halving has done a very good job of boosting sentiment in the market. If we hadn't had the halving, I think we'd have been a lot worse off than where we are now, both from a price standpoint and from a general sentiment standpoint. Kind of how people are thinking about the potential of crypto. Before COVID, everything like this, short term, very bullish on crypto and on Bitcoin's price and other asset prices because of the halving. But it's a bit harder to kind of bear that risk, all things understood, with the broader economy. I think if anything, COVID and the broader economic challenges we're going through has thrown crypto into the mainstream. After 2017, everybody knew what Bitcoin was. They'd heard of it before. Maybe they don't understand how it works. they have some general idea that it's some sort of digital money that can be passed back and forth, and certainly understand that it's very volatile, and most people still are not comfortable putting their assets into it. So you know now that it has been kind of post COVID here, or during COVID here, now that it's been thrown into the spotlight, we're going to really see how mature crypto is, how ready Bitcoin is to be that digital store of value. And when that happens, I think the risks are much greater, and kind of the chance that this doesn't work out becomes significantly more elevated when you put the pressure of all sorts of additional capital onto the system. When you include all sorts of new participants into the crypto economy, you start to stretch out its structures, and it will really, in my opinion, be a test as to whether or not crypto is ready to be a major asset class. Something that somebody looks at and says, hey, this is a viable alternative investment for me as a someone who runs a family office, or someone who's a multi-millionaire, or someone who even runs some sort of large medium-sized business, right? And looks to kind of diversify some of the way that they accrue value. So it's not a super specific answer, but we're naturally more market neutral at this time. We very rarely take large directional bets, long or short. But just broadly, myself in general, not speaking for Pirata itself, I would say I'm kind of more nervous of sorts at the crypto market right now than I probably have ever been. So, I think maybe 80% of that, or 70% of that, is kind of the goings on that we have in the global economy and crypto being thrown into the mainstream, and maybe the other 20 to 30% is just my evolution as someone in the crypto space, continuing to understand the risks that are constantly inherent, as well as the new ones that are presented every year. So it's a little bit of a mix of both.
No, I think it's a perfectly great answer, because crypto in and of itself is quite nuanced. So it's very difficult to really pin down oh yes, I think this is going to go there because of X, Y, and Z. And typically the people that do that either don't know what the hell they're talking about, or they're taking an extremely long time horizon. They're looking 7-10 years out in the future. So they've got a little latitude in some of the declarations that they sort of put out there to themselves, but also to the world too. But I tend to agree with you, where I'm a little bit nervous, or I should say cautious, in the near term, but obviously long term, I'm quite bullish on the asset class. I'm quite bullish on Bitcoin for a variety of different reasons that we've kind of touched into a little bit today as well. But yeah, I think that's a great point that you brought up. It's is Bitcoin ready for the prime time? Where it makes me go back to some of the early days of Bitcoin, where some of the original proponents were trying to push it more and more. And even core people were saying, let's just wait, because we don't want to try to overstep too much. And then whenever we're not big enough or robust enough to where we can actually draw the ire of some of the governments or regulatory bodies and stuff like that. And they did that appropriately. It's now it is such a phenomenon that it would be very difficult. The only way to fully shut it down and really cut the legs out from under it is a coordinated attack from every single government in the world, saying, essentially blacklisting it and saying, you cannot trade in it. There's no fiat on ramps. There's no way to get your money in and out of that. It cannot be accepted anywhere. And I mean, it's very difficult to get two countries to agree on one thing, let alone everyone in the world. So Bitcoin was smart in that particular perspective. But this one with COVID, it didn't have a choice. And now you're seeing, again, a lot of these people, Paul Tudor Jones, and, more and more people, Raoul Pal has been a big proponent of it, saying, I think, essentially buying into the store value narrative. And it's is it ready yet for that? I totally agree. Long term, it will fall within that particular bucket, or maybe be some kind of derivation there with of. But is it ready for the prime time stage right now? And I think ultimately how like the undercurrents that you talked about with COVID shake out is going to be very telling, whether or not it's like it's ready for its prime time. And then if it holds up, then you start seeing the family offices, the high net worth individuals, and everyone around the world saying, all right, let me get some exposure to this as, you know, a component into my retirement portfolio, you know, the 1, the 2, the 3 to 4, 5% allocations of it. And then the real lighter, you know, fluid is whenever the larger pension funds really start jumping in, potentially maybe because they believe in it. But I think the more likely scenario is they're going to need to yield chase at some particular point. They're going to realize there's no way in hell that they're going to be able to meet their unfunded liability obligations, and they're going to have to yield chase. And digital assets has had the greatest expected return, you know, over the past 10 years, probably in the history of recorded financial history. And, you know, they're still extrapolating, not gangbusters returns like that, but well above what you would expect on a year over year per annum basis for like the S&P or fixed income, or even venture, you know, even private equity or sometimes venture capital, as well. So I think that's a really interesting perspective. And I don't think you or I have like a good answer for it. So like we're cautious, but it's like, okay, we'll gradually see how this might begin to play out, in the short term, especially if second waves start picking up again and there's some additional second shoe to drop of this second act of COVID.
Yeah, for sure. I mean, there's a lot to unpack there. I mean, I think there's kind of been this concept of the institutionalization of crypto, that people call it, that has been hopefully happening over the past few years here. You know, for many months here, I thought that March would decimate Bitcoin as the potential store of value, and it may still, just because it was, you know, if you look at the numbers, it was one of the largest major asset classes of sorts. If you take Bitcoin as the leader of that asset class, you know, it was hit the most, you know, 50% or more, essentially in a single day, where you didn't see that with other assets. And it's bounced back very well, but you know, kind of timing is everything, right? And if you're looking at your pension or your IRA, your 401k, your investment, and you lose half of the value in 4 hours, it becomes very difficult for a lot of those institutional folks to kind of take the leap. I like the idea of the yield chasing phenomena that might happen. I mean, it's a much larger conversation, and definitely a much larger problem than I think Bitcoin or crypto could solve on its own. But it's definitely an interesting thought there as to kind of almost Trojan horse crypto as a store of value, by treating it as a speculative asset. So I think that's really where we sit. You know, for all, I think the good that Paul Tudor Jones and a lot of these guys have done for Bitcoin in 2020, really, I think what they believe in for Bitcoin is that it could do really two things. One, act as a very impressive speculative asset. You know, we've seen that over the last 11 years. Just price continues to climb. You know, in a lot of cases, overshoots where it should sit price-wise, just from a network health standpoint or just from a fundamental standpoint, because of maybe the lack of liquidity, or kind of, you know, a lot of the retail-led movement, you know, the hodl movement that you see with Bitcoin and you see with crypto. So, you know, if the price in 2017 was supposed to go to 13K from a network fundamental standpoint, it actually went to 20. You know, based on the way that kind of money flows into crypto in this FOMO way. So I think for some time still, we're really going to see your institutional folks treat it as a speculative asset, you know, number one. And I think number two, if it continues to act as a hedge, as something that's not diversified to really any other asset class, which it struggled to do since March. You know, it's even as of late, it's been incredibly correlated to the S&P, almost down to the minute. You know, if it can fill both of those spots for these institutional folks, it makes sense for them to hold it in their portfolio. You know, it's able to provide those giant returns while also still acting as a hedge over time to the majority of the other assets that they hold. I think without this institutional kind of wave of folks coming in, or without this institutionalization of crypto, it's going to be very, very hard for crypto to grow considerably over the next 5 to 10 years. I think it's gotten to a point where it's ready to kind of start to explore some of the bigger money that exists in the world, if you will. Your family office types, your high net worth individuals. A lot of these people are already playing around with Bitcoin. They're looking at your more market neutral strategies. They're looking at ways to pull out yield from an asset class that's completely new. They're not necessarily looking for 300, 400, 500% gains, unless maybe they're taking more of a venture type strategy, but they're happy to look at crypto and, grab 10 to 15%. That's huge for a family office type. So, I think that's where for the most part their focus will stay, is kind of, hey, here's an interesting, very speculative asset that is not correlated for the most part to any other assets that we hold. And depending on where the rest of the crypto, herd takes that good news, and how many more folks come in alongside kind of the hodl aspect of crypto, will determine where crypto goes from here. I think it's going to take a long time before we see some sort of, giant, pension fund type asset move in. I mean, really, when you get that big, right, when you're managing hundreds of millions or billions or trillions of dollars, it's not about necessarily making money. Really, you're preserving wealth, right? It's easy to make money, but it's really hard to keep it. And that's what those guys are focused on. So when you look at something like Bitcoin, the risk will almost always outweigh the reward to those folks, purely from a just, net 100% long exposure to those assets.
Yeah, from a volatility standpoint, I mean, you're 100% correct. A lot of them, and even talking to family offices and institutions myself, it's like, we don't need that. It's like, we'll give back the nosebleed returns because we don't want the nosebleed drawdowns as well, which I think is why strategies like Pirata's is it seems to fit that bucket, that is a little bit more palatable to the institutional class as well. But I think that's the great question mark, is whenever you start moving up the ladder of some of these institutions. And I agree with your assertion that to get Bitcoin to a lot of the price levels that people are talking about, 20,000, 50,000, 100,000, a million, I think you're 100% there's gonna need to be a tidal wave of large money that is coming in droves. It's not going to be a linear thing where you look at it's like, okay, just little by little, where you look at a grayscale, where the money that comes in each and every single quarter, it's going to be something very much non-linear to be able to drive that. And it will overshoot on the up, just like it always does, given herd mentality. But yeah, I think that's the really interesting question mark in this particular space. And I agree with you that Bitcoin is still transitioning from a speculative asset to a store of value. So it's like, right now I'm doing research for a new Forbes piece, and I won't bore everyone with all like the data analytics nonsense. But what it roots out is that Bitcoin is actually very tightly co-integrated, not correlated, which just is a deeper measure of long-term relationship to the S&P 500, at least over its very short lifespan of 11 years. So you've got to take that with a grain of salt. And also, you can't even use some of that early data. So, you even look at, snip it down a little bit to 6-7 years. If we believe that holds true, which I do, looking at the data, it supports the notion that it is a speculative asset, but it is maturing to more of a store of value, and like the data analytics that I've been working on kind of like talks about that in a little bit more deep of a way. So I agree with what you're saying, and at least from some of the data that I've been able to look at recently, it supports that notion as well.
Yeah, and 3-4 years from now, if you look back at the history of Bitcoin, right, it's not hard to say that we might have a completely different narrative for Bitcoin at that time. I mean, I think there's a good chance that the evolution of Bitcoin will not, it will continue to be volatile, but could be one where we don't ever see a new all-time high. It could be one where price continues to kind of exist within a larger band. Maybe it's 5 and 15K, something like this, and your more sophisticated traders and investors come in and kind of pull out the alpha that they see in the market, and drain the yield until it gets to a point where over the next few decades, it's an asset that has lived through multiple recessions and has survived through multiple halvings, and everybody and their mother has some sort of exposure to Bitcoin via purely holding it, or 401k, or some brand new technology that's out that allows them to very easily transact in Bitcoin in an easy way, in the same way they do it through Venmo or Square Cash or something like that today. All of that can happen, I think, without Bitcoin doing the speculative things that everybody thinks it will do. In a lot of ways, speculation is what kind of sells people on Bitcoin right now. There's not really any sort of convenience or underlying value that normal people look at and say, hey, like, this is why I'm going to use Bitcoin versus using the US dollar or the euro or the pound or anything like this. It's pretty much purely speculation that has people jumping in to the industry. So, if it becomes harder and harder to speculate on Bitcoin, you could almost foresee this, this path in time where speculation doesn't play out, but so many people come in on that speculation hype that now it has almost proved itself over many decades of time, just by purely existing, right? Without having to pump to new all-time highs or something like this. So, it's definitely an interesting time right now in crypto and with Bitcoin. It's grown a lot. It's done a lot of amazing things, and we see the technology continue to grow and evolve around Bitcoin. But it's still in a lot of ways just as shaky as it was back in the day.
With that, we'll leave we'll leave the space, because we've hit a bunch of different topics and probably went a lot deeper in a lot of different areas than probably a lot of people expected. Moving to something a little bit more fun, at least near and dear to me. So I know that just looking at your tweets that you're a UFC fan. So obviously the name of the podcast is Crypto Muay Thai. I'm obviously a huge proponent of Muay Thai. I'm a washed up former Muay Thai fighter. Tell me how you got involved in UFC, and tell me some of the more fun guys that you like to track and stuff like that.
Yeah. I guess it was my sophomore year in college, there's a little boxing and MMA gym right by Washington and Jefferson, and strolled down there and checked it out, and ended up doing that for a bit less than a year. Where basically I kind of went in a few times a week and got punched in the face a bunch, and kind of learned the basic techniques of boxing or grappling or jiu-jitsu a little bit here and there, until it got to a point where I was kind of like, okay, well, I know I'm not gonna be doing this as a career, so this doesn't really make sense for my longevity or my joints, or certainly my brain. I'd had enough CTE from football. I didn't think I needed any more from boxing. So I kind of got into it there, and was into it in general beforehand as it was growing. So try to watch as many fights as I can. I'm just I think it's a sport unlike many others. I've always been a huge sports guy outside of football too. I mean, I'll even watch tennis matches here, golf on TV. I love sports, but UFC in general is is very unique. You know, it tests so many different aspects of an athlete, and you can, you know, really see in real time kind of the outcomes of those various tests, right? You know, it's so often that you see someone on one side of the ring who's just fit, you know, cut up, very strong, taller, you know, probably post weigh and heavier than this person. You know, they've been able to put on more weight than their opponent, and yet their opponent's maybe a little chubbier, certainly shorter. You would think they might be a bit slower, and then kind of the chubbier, smaller fighter just completely takes it to you know, the more in shape fighter, and you know, maybe that's kind of more on the mental aspects of it, or whatnot. But I've always, you know, kind of been fascinated with the different games that are associated there. I mean, I love your popular fighters for sure. You know, trying to think of some of the other lesser popular fighters off the top of my head. You know, I like Garbrandt a lot, Cody Garbrandt, because he's got some history here in Pittsburgh. You know, like to follow him. You know, and then there's some. I think there's a French fighter. He just fought recently that I like a lot. But in general, you know, I'm not kind of a diehard fighter fan this way or another. You know, I'll watch even the prelims, a lot of the no-name fights.
You just like the sport in general.
Yeah, for sure, for sure. I mean, I think it's a lot, you know, if you have kind of a baseline understanding of what's going on, you know, in the same way that you would need that to watch football or basketball or anything else, it's a lot more exciting. You know, if you just see two guys that look like they're kind of leaning on each other on the side of the cage and moving their arms back and forth and their feet, it's like, okay, well, what's going on here, right? I thought this was kind of like boxing or kind of like wrestling, and it's harder to understand what's actually going on underneath, which is this larger chess match and this larger setup that these guys are trying to play out in order to best the opponent in some way. But I mean, you've got a background in Muay Thai, so do you follow specific fighters that have more of a Muay Thai background, or, you know, what's kind of your perspective on it?
Yeah, I'm super biased. As way as, like, you know, guys like Joe Rogan, they're always talking about the ground game and hyping up, you know, Brazilian Jiu-Jitsu, which is totally. And then the wrestlers, guys like Cormier, they're talking about the strong wrestlers and the strong base. So I think that's, again, what's kind of interesting about MMA is, you know, it brings everything together. So the same exact way that's like you would look at, you know, the market perspective, it's like, all right, what's going on with the fundamentals, like on-chain metrics? What's going on with the technicals? What's going on with the sentiment? Like, how's the general macro view? Like, what makes MMA so fun and so compelling is the fact that a lot of times you don't know what the heck's going on. Like, you could have some guy that's super great at wrestling or super, you know, former Muay Thai world champion, and then you've got these little gloves on, and that just creates an entirely new dynamic for sure. So yeah, I follow a lot of. I don't follow a lot of UFC. I, quite frankly, admittedly, I like ONE FC, which is the Asian promotion, more just because they've got better stand-up fighters in the lighter weights. As you get past like probably 155, it really tanks in terms of like quality of MMA guys. But what they've done is they've taken Muay Thai, even some former like stadium champions. I won't take people down that particular path of what that constitutes, but these guys are killers. Brought them over to ONE FC and you know, hold Muay Thai fights in the MMA glove. So it's really, really interesting to see high level Muay Thai with those gloves. So I follow a lot of that. But in the UFC, guys like Stylebender, you know, I find really interesting. Guys with solid Muay Thai pedigrees.
More striking, yeah.
More striking for sure. You know, I like Cody, but Cody's he's more boxing style, and
Yep.
he'll try to take your head off with the right hand. You know, I never fought like that. I'm more of like a technical individual for, you know, you could take that for whatever it's worth. But so the guys that are really, really good at the craft, like playing that chess match, it is truly a chess match. I really like watching those guys because I can look at it first as a fan, and then I can go back and rewatch it as a student. I'm like, okay, why did they move there? Why did they step there and do that? Whereas, you know, a guy like Garbrandt, or, you know, even Ngannou is another one. You're not going to learn much from watching those guys fight. Like, Cody will
Right.
try to take your head off with his right hand, and Ngannou will just, like, if he touches you with either of his hands, he's going to put you to sleep. So there's not much to be learned by, like, saying, like, okay, if I haymaker someone, they'll go down, and I never want to fight a 6'5", like 265-pound guy from Cameroon. Like, it's just
Yep.
so I tend to gravitate towards strikers, but I like to see people that have a little bit of a technical background as well. And, you know, getting hit in the face, it's not for everyone. So, like, with talking, like, you know, from your perspective, that's why you see a lot of, like, Brazilian jiu-jitsu. The class sizes are way bigger in those. Again, you're putting strain on your neck and your joints and stuff like that, but there's not a lot of these CTE type issues, or even just, you know, comfortability with getting hit in the face. It's a different experience, versus, you know, being in a grind of wrestling or jiu-jitsu or something like
Mm.
that.
Yeah, for sure. I mean, that's it's funny you bring up kind of the technical aspect of that. I mean, it's easy metaphor to crypto, right? Like, you're someone who is training Muay Thai consistently, it sounds like, and obviously the focus is on more technical, right? You're you know, in this strategy, you're not looking for that knockout punch, but somebody who's not actively doing that, right? All I care about from an entertainment standpoint is kind of that, you know, I like to watch a Cody because it's very flashy, right? It's a you know, one hit knockout potentially. And that's what we see with crypto, right? Those of us who have been in the market for a long time kind of understand the risks, have got lucky, have gotten unlucky, but take it from more of a technical standpoint, more of a kind of slow and steady pace. Whereas those who are just in it for the fun kind of thing, right? In it to speculate part time. They want that one punch knockout, right? They want the 100x leverage and the giant returns and all this. So, you know, it makes sense. I definitely see the metaphor there.
Yeah, I mean, it's a metaphor for life. Like, you, if you want to be in this space for long term, like, you'll start out like, all right, I'm gonna knock people out, and same thing in fighting as well. A lot of people, it's like, especially if you're naturally strong or naturally pack a good punch, that's going to be what you go to. Like, that's going to be your strength. But over time, you're going to run into someone that can take your punch, that
Hmm.
is more technical than you, and you're going to have to adapt, or, you know, you're going to quickly sort of, you know, fall from grace. And it seems like it's the same exact thing for the individuals that have lasted in this particular space. Maybe they came in, I mean, everyone came in looking to get the home runs. It's super sexy, and who doesn't want to make 100x, you know? But that's not realistic all the time. And if you continually go with that mentality, you're going to continue to get wiped out each and every single time. So I think the people that stick around are gradually the ones like yourself and myself, where it's like, all right, I'll take a single, I'll take a double, or, you know, in fighting terminology, it's like, all right, well, I'll stick a jab, like, that's fine. I'll take a body shot,
Hmm.
like, that's a solid thing, and, you know, I'll just keep moving. But I definitely view the market and our investing strategy very similar to how I approach a fight. It's just wiring of the brain. Like, I don't want to go in there and hit a home run. I mean, if we get it, that's awesome, but it's not something that you can kind of go in there predetermined looking at a little bit. But yeah, man, I still got it. I still got it for sure.
I love it. I love it.
I still got it. Awesome. So I think we've been jammering here for a good bit. I think this was great. We touched a ton of different topics. Is there anything that you just want to say that, you know, before we sign off, that maybe you didn't get a chance to throughout the podcast?
I don't think so. No, this has been great. You know, congrats on launching the podcast. I'm honored to be on as one of the early guests. Definitely appreciate it. You know, if anybody wants to learn more, you know, just piratacapital.com. There should be an email to get a hold of me, or you know, on Twitter and elsewhere. My ID is that Finch guy. So, you know, feel free to kind of follow along. I'm kind of sharing thoughts there as a way for me to kind of get them on paper of sorts. So yeah, other than that, it's been an absolute pleasure. Best of luck as you continue to get on more guests.
Yeah, I truly appreciate it, and like I'll tell all my early guests, I'll definitely have you back in the future as we work through the inevitable bugs and ups and downs and stuff like that. So we'll get you back on in the future whenever everything's more stylized and looking great and stuff like that. But I appreciate it, Mike. It's been a great conversation. Thanks everyone for tuning in, and I will talk to you next time. All right.